We're live this week for the 3rd and the 7th of October. Happy Q4, everybody. I'm sure everyone is looking forward to getting Q3 out of the way. Or are we? Maybe there's more to it. Take a look at the risk disclaimer first to begin. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the risks. And if you're following me out there on social media, make sure you're following the real me. And here we go. Happy Monday, everybody. Taking a look at the currency strength chart, we have some risk appetite coming in, kicking off Q4. Dollar, yen, Swiss, and euro all week. We have the New Zealand dollar leading the way. Nice little charge to the upside. I'm taking a look at some opportunities to enter in euro New Zealand to the downside and New Zealand dollar to the upside. Looking for some decent levels here. New Zealand dollar, I think I've got a little scalp for a safe 20 to 30 pips this morning. And I'm going to look to get a couple of bucks out of this. Let me see what I can grab here. Let's do... Looking for a pullback. Let's try this. All right, I'm going to keep it on that this morning. New Zealand dollar just got in around 56.90, and I'm going to look for something above 5700. The nice little pocket level. Let me go to the charts here. New Zealand US dollar. So really everything turned right in the open. I mean, if we take a look at our daily candle, we closed Friday right here, open up Sunday night, and we're pushing for hopefully a little run back into this pocket from last week around 58.05. A couple of weekly pivots available as well in the New Zealand US dollar. So I'll set a chart alarm here at this little pocket zone, 58.05. I'll just set it at 5800 actually. Let's go right here. So add alert. And apparently that doesn't want to work. So let's try trading view again. And that'll give me a moment to get logged in as well to the channel. And see who's here. There we go. All right.
The number one draw.
Good morning. We have Gary on the top saying hello first thing. David, good morning. Donna, good morning. Chris, good morning. Sterling, good morning. What's happening, everybody? Donna coming in right away with that thumbs up button. Love it. Andrew, good morning. Ruth Ann, good morning. Daniel, good morning. Steve, what's up? Moach in the house. Jason is here. Trading battle. What's up, team? What's happening? Daird's here. Don here. Everett, good morning. Nice to see everybody. All right. Morning, Craig. Morning, Marilyn. Linda, good morning. All right. Nice to see everyone. Let me get into my little workspace. Got it. Is this not my workspace? Pulver Chris. Yeah. Where are my charts? All right. I don't know what happened there. Anyway, let's just take a look at some price action. So New Zealand US dollar, this is what I'm talking about. So go to the weekly time frame, and it's right here. So can the New Zealand dollar come back into this area? This nice little pocket zone right in here. I think that's a good profit. We also have some really strong support there from 2020. Now, again, this could be a very short-term move to the upside towards 58, 5900. We might have one final flush. Let's say that we make a quick run here, a little piercing line or something bullish to the upside, get back into this pocket area, find some pivots. We might have, maybe one more push, but Q4 might come out swinging with some risk appetite. I did read an interesting stat this morning from my good pal Jordy Visser. Let me find out where that screenshot was. Did I take a screenshot of that? No, but I'll find it. It was a tweet this morning. Something to the effect of, with the markets being down X amount. So the S&P 500 finished September down 9.34%. It was the fourth monthly decline of 9+% or more since 2008. The only other three where the S&P closed down more than 9% marked major lows and led to 4 monthly gains. So again, pulling some history context. Are we about to see a jump? All right, this clearly isn't my sign into TradingView, so I'll just stick with it for right now. We'll just use the free version to get through today's session, but I'll get logged back into my workspace per usual on TradingView. But let's take a look at the SPX. So right in here, you know, big drop to the downside, 9+%. S&P took out the lows. If you go to the Qs, took out the lows. Pre-market is up on the Qs. Pre-market on the SPY. We're looking for some risk appetite. 361 with a close of 357. So, you know, I'm still looking over here as we should, right? I mean, past resistance becomes support. If this is the leg or the effort for that fifth wave, that would be wave 3, wave 4. Are we still pushing lower? Now, we could pull back today, but as long as the bears stay below 390 on the SPY, I think the pressure remains to the downside. The only kind of saving grace right now is we don't have a Fed rate decision for October. It's coming in November. We're going to see if the pause is priced in any way, shape, or form. We're seeing some intervention in central banks right now. Bank of England came out swinging last week with a wild week with crazy weakness after a flash crash, and then 800 to 1,000 plus pips on the upside post flash crash. So it was a nice little cleanse in the market. We were actually, in the trading rooms, we were taking a look at some of the JPY crosses, or the Swiss even, or the dollar even, the euros even, and somehow the pound came out swinging with that flash crash. So we were right. We did say there'd be a flash crash this year. I just didn't expect it to be the pound. But based on the behavior we had the last month or so, I mean, it made sense. The pound was extremely weak. So anyway, nice to see everybody this morning. And I am looking at a little exploitation on this New Zealand versus the dollar. Two trades I'm looking at this morning: New Zealand strength and dollar weakness. So I'm long New Zealand dollar this morning. New Zealand strength and euro weakness. So I'm looking for euro New Zealand to the downside. Those are my two picks that I'm trying to scalp this morning for, hopefully 10, 15, 20 pips each. Eliminate risk, put in a trailing stop loss, and hopefully go after a couple of bucks. So I'll keep a close eye on things right there. All right, let me see if I can take a look at some pocket activity. Yeah, I mean, there's a decent little chunk back there on the New Zealand US dollar. From the entry to this little pocket area, that's at least 60 pips. We fill that pocket, that's 200 pips. So I'm going to stick to a little Kiwi dollar right there. All right. Just got back from a long Utah trip. So Friday, Saturday, Sunday, got back yesterday afternoon, back in the office. I wish it was Sunday, so I had a day off, but it's all good. Lots of notes review this week for equities on demand. Lots of covered calls. Not a ton of expirations. Let's go to the doc really quickly. Sign in with the appropriate. There we go. Just going to check expirations for 10/7. I'm pretty sure we don't have a bunch. What we do put in here this week will probably be covered calls. So 10/7, 0 expiration. So most of what I'm doing this week in stocks and options will be continuing to repair and add up covered calls, lower my cost basis on owned shares. And then if we have any pending assignments or we have any early assignments from brokers, we'll manage that this week as well. Trades that are going really well, let's take a look at this. Trades that are going really well would include over here, the SPY. We have a 360 by 365 bear call spread that we collected like 75 to 80 cents on, or no, like $3.50 to $4 on that. It was a $5 spread. It was 360 by 365. We also have a 390 by 392 that we collected like a dollar, I don't know, 20, 30, 40 on. That's going to be nearly in full profit with an expiration later this month. So, yeah, I mean, we did take some stabs at the SPY. The VIXM is up, trading at 35. We have a 33 by 32. So our hedges are working out just fine. We're long on volatility and some of that risk off tone, so that's paying us nicely. We're also short on Apple. Collected $3.94 on a 140 by 145 bear call spread. So that's up a decent chunk as well. That's an October 21st expiration. So Apple, again, it's eluding me why Apple was falling other than some more conservative guidance moving forward. And maybe I just saw a commercial last night for the iPhone 14. It's like cool, so you can be a film director with an iPhone now. Um, it's like, oh, fantastic camera. I mean, we know that. So in the world of bloggers and vloggers and social influencers, sure, get a great camera. So look, I mean, I still want to own Apple forever. I just think that, technically speaking, I'm happy to buy it on sale. And we took a stab at it because the overall markets were looking to fall. So your mega tech like Microsoft, Apple, Amazon, Google, all those are kind of dragging things down with it. So with a market cap weighted index like the S&P, makes sense we're getting some discounts, right? So if Microsoft is bringing everything down, Google's bringing everything down, it makes sense that the SPY has been falling, and it has. Yes, so Google down as well. We do have some trades on Google that we've kicked out through end of Q4 and Q1. Some 105 by 102.50s and 102.50 by 100s. Looking at some bull put spreads, and we'll continue to watch that. DXY, let's take a look at the dollar index. We're at 112.15. Big levels to watch, 115 on the nose. We're at 114.73 as of last week. That was the high. So are we into this big level? This is a weekly time frame. You come all the way back into this big pocket, this big inefficiency back in 2002 after we peaked at 120. The way things were running and going with this breakout here from April this year, I was talking about this 115 level might be a resistance zone, and we might just stretch all the way to 120. I really thought, you know what, if we're going to have a flash crash in the dollar, 120 made sense. But from that, I would still be short. And so, is this officially the turning point? I'm still looking for a three-wave move to the downside just to have a correction. We have super high bar counts on the DXY, the US dollar, the dollar yen, and let's go dollar yen here. Dollar yen trading at 144.83. Take a look at this weekly chart. We're still getting some indecision after that Bank of Japan intervention, which was right around the highs at 145. And I do have some sell stop orders in. We put this in last week for the Flex Trading Room. I'm looking for a little sell stop trade around 143.40. I'm going to try to get a head start if that gets filled and activated, take it back down to that BOJ intervention candle, and then see if there's a little bit more to the downside. Maybe it's a higher low, right? Maybe we form a higher low, but I'm still watching that. If this structure ends up breaking, even if we connect the lows like that, if that structure ends up breaking, I think we at least have a three-wave move and some corrections coming. So, but again, is the market going to price in something that the Fed is doing? I mean, I don't think so. I mean, the Fed's not really changing its tone right now. They're going to do whatever they can to extinguish inflation. And to do that, they've got to be super tough. And right now, I think for uh, the month of October and the quarter here, I mean, U.S. oil is on a rip. OPEC announced they're looking to cut rate or cut production, which is probably the last thing that inflation watchers are wanting to see is, oh boy, here's energy costs going up again. But you can't deny, how compressed this has been. I mean, there's a lot of buildup right here, right? I mean, prices just let loose and ripped, and tons of volatility, and we've had a lot of compression in oil. So I could see a break coming. Maybe there's some resistance here on 95. I guess my concern for anyone that's really worried about inflation and having it stick around would be if oil retakes the $100 mark, $100 and beyond, and maybe we have China coming back online. More demand means higher prices, right? Because more demand with less supply. If they're going to cut production, more demand, less supply. That drives prices higher. So we will see. But I think oil is going to be a really interesting play for Q4. So energy stocks, we have some exposure in those. Halliburton, Schlumberger, Katera Energy, handful of those in equities on demand. But same thing with UK oil. Go to Brent crude, UK oil. Right here, same type of structure, lots of compression. So do we get a bit of a squeeze coming? We break that structure. There's a little bit of support here on 100. And we just start marking these previous highs, because if we just break above a little pause, we could be looking for more upside. Winter is coming, as they say, right? So we'll see. We'll see. SPY is falling. Yep. Sky is falling. SPY is falling, right? Yeah, but like I said, I mean, look, it's Q4. I mean, I think the markets did a pretty good job cleansing over September. The September effect was for real. So, Q4 typically historically is a bullish period. October through March, that's one of the best stretches in history. Are we going to price in? And this is what I'm curious of. If you go back to the SPY and go to the weekly time frame, are we still going to come down to revisit? So it's 9:32 Wall Street officially opened here. Are we going to come back and revisit this pre-COVID high at 340? And I talked about this last week. I mean, I wouldn't mind revisiting 340. I wouldn't mind it. Reason why is that'd be a fifth wave move. I also see a reasonable bounce right there in the short term, and you just make a channel. I mean, if we just have a pretty decent channel and some obedience there, then there's opportunities in here to be long, go after some short-term profits. We've got bull put spreads. We can go long calls. We can do all sorts of stuff with options. But options is going to be the way to play it, because if we're looking at more of a reset, more of the trouble ahead, and things just get worse and worse, then I still want to be protected with the expirations I have. So, but like I said, with today's move at 360, do we just flush lower, or do we have like a quick pick me up to the upside, pull back to some of these pockets, 370, 380? Some of them are pretty visible. There's a gap or so to get filled as well on the daily time frame. You can take a look at this right here. Zoom in on the daily time frame. So we poked that last week and flushed back down, but we could officially fill that pocket right around 373. Other breakout around 380. And again, major milestone right now is 390. If the bulls can overtake 390, I'm a little bit more convinced they mean business. But right now, I think that the bulls, they've been getting their butts kicked, so they're going to come out. They're going to have to come out swinging with a lot more conviction than what they're showing right now. I mean, we gap slightly higher, about $2 to $3 to the upside, but amateurs open, pros close. So a green candle today might mean something optimistic for Q4. There could be some quick, short coverings, but we'll find out. So all good. Okay. Anything else you want to take a look at this morning? Let's go to gold and silver. If we have a weaker dollar, gold and silver should be off the low, 1667. I said if we overtake 1680, I've been mentioning 1676 specifically, but if we overtake 1680, I think that's a pretty good spot for gold. We could make a run above 1700 plus. I think that does a pretty good job putting in a firmer bottom in the interim on gold. Again, watching the dollar as well. If we see a weaker dollar, we should see stronger gold. Silver making a nice run off the lows. We're at 20.01. That's a really strong looking push there. I am pretty bullish on silver. My break even's around 18. So I'm happy with this right now. Let's see how high we can go. And on the bigger time frame, if this is just a massive correction, I'm ready for silver to catch some bid, get some wings up towards $28 to $29. Copper is another one we're keeping an eye on. Copper with lows around $3.12, so we're hanging out at $3.39. This is another play in the probably foreseeable future, the next 3, 6, 12 months. I think copper to the upside makes some sense too. Utility-wise, it is in everything. It is in everything. So, I mean, you have a home, copper wiring. You have a car, copper wiring. You have, a collection of pennies, copper wiring. No, I'm just kidding. No, but copper is in everything. So, is this structure that we can work with? Something like that. So is there, we're kind of at the midpoint, and this is what traders need to understand. A lot of these channels and a lot of these patterns, if you have a high and a low, don't forget about that midpoint. All right. A lot of times that's a nice little balance point for the market. So we're stalling right here. Now this could certainly bounce to the upside, or this could complete the move towards support. So I'm not really sure where copper's going to be going as of now, but I do know that if we came back down to the lows around $2, I'm very bullish on copper. If we hold this midpoint and start to rally back up, I think $5 or overtaking the highs is doable as well. So for the most part, opportunity 1 to look long, opportunity 2 to look long, and I will continue to hold long and work my cost basis down on copper. Okay, dollar yen, we'll take a look at that one, sure. Did you say you were long? You said you were long, Daniel, right? 144.93. Let's go to the daily time frame. 144.91. Like I said, I did put in, so I'm maintaining my short position on the dollar yen based on the bar count and the technicals, 147.50 to 150. I have those pending orders to the upside just in case they get filled. I did put in a sell stop last week at 143.40, has not been filled yet. So if we see it fail at this BOJ candle high, I'm looking to see, maybe a rejection there, pull back down, and I want to see if we come back to retest this BOJ candle low. If we can break below this candle low, I'm measuring that move. So high to low, and then measure the breakout for the same type of move. That should put us down into around 135. Also a daily bar count on the 200 exponential moving average that I'm watching really closely. So it's the same analysis. I mean, I'm watching, this structure very carefully on the dollar yen. We're kind of blowing this move off right here. There's some resistance, and we could still hold this. I mean, this structure could pull back into BOJ candle. We come back and find this channel support. This is clearly a make or break. Either the bears take this thing for a big correction, or we bounce back up and we start revisiting these highs, and we just have this game of back and forth. Will 145 continue to be an intervention level by the Bank of Japan? Just on the dollar yen, I'm not sure, but we're gonna find out. Okay, so that's what I'd be looking for on dollar yen. And let's take a look. Some other what other ones? Let's take a look at some of these pound crosses. Pound went nuts last week, and I mean, I'm hoping there's a lot more upside. And it might seem completely counterintuitive, but after a flash crash move, there's a lot of short covering. And so with this explosive move back up, so this is 103.76. We came back and hit that pocket at 112. I'm gonna look to see if this happens. So if we have any pause or pullback, the bulls might still make a run back up into previous support or come and challenge a high. We could be putting in, again, flash crashes do this. They tend to create tops and bottoms in the market. So I'm not calling the bottom necessarily, but I'll be watching for price to dictate. So we have 1, 2, 3, 4, 5 days, all of last week after a Sunday flash crash. And any type of, if the bulls are able to hold this area and then get another thrust to the upside, we might even make our way back into 118, possibly 120. So just really curious on how this all shakes out with the pound crosses. If we're seeing again, we're talking intervention stuff like Bank of England. They're coming in and kind of saving their currency at the moment. Then, I mean, I certainly don't want to fight that if that's where the volume is, So we'll see. But pound crosses are still getting some love. And if we have risk appetite, you can see here on the currency strength chart, the Kiwi, the Aussie, the CAD, the pound. This is last week. So the pound finished super strong in almost every day last week from, after the flash crash on Sunday, it came ripping back on Monday through Friday. It was just pound strength every day last week. And then today, pound's actually base, but it was weaker, got a big bid here during that London session and has maintained pretty good strength. We're starting to see the Swiss get softer, the dollar, the yen are turning up, Kiwi's turning down slightly. So just keep an eye on things. That's all. It would be a pretty abrupt shift, but I do think the market is ready in some way to maybe see some short-term pivoting, just because we've had such a violent bearish Q3 that maybe it's a little relief rally. So that's what I'll be looking for this week, is a little relief rally, trying to get positioned accordingly and make some good risk management decisions. Okay, there you go. I like that play there. If it drops below 144.74, I'll be short. Okay, good. Yeah, you're just doing some good work inside that candle then. Watching the fail off these levels, 144.74. Yeah, I like that too, if you're on the smaller time frames. So there's just a lot of consolidation going on here on the 1 hour time frame. Yeah, we break below. I mean, I like the 140, the 143.80 level to be slightly safer, but I agree with you. Some of these wicks, 144.50, 144.70, like you said, watching those levels pretty carefully. Okay, let's take a look. I see Bitcoin here at 19.1. Let's go to Ethereum. Ethereum trading at 12.96. So strong support on Ethereum at 1,000. Bitcoin strong support is at 18K. So we'll keep watching those levels there. All right, Tesla. Whoo, baby. Big drop on Tesla. Looks like I got my work cut out for me for some covered calls here. My break even on Tesla is 269. And I think I've got a covered call out to October. So I'm going to keep drilling this cost down here. I might look at doing some bull put spreads on Tesla, maybe back down to this level around 200 bucks. But I'm just going to sit tight in the shares for right now and do what I can to lower my costs for the next couple of months. This could be another one with some fifth wave. We have some big tech moves. Wave 1, 2, 3, 4, 5. Fresh low into the 200s, maybe the 160 zone. Get this correction, out of the way, look for some structure over here, and then look for another spot to get long on Tesla. So we are not done. One thing I'll check really quickly before we go, and I'll wrap things up for class. Number one, I get my TradingView account back up. I don't know. This is my. I thought that was my profile, but maybe it's something else. Doesn't matter. I'm going to check the Fed really quickly. So that's OPEC. Actually, let's check OPEC. So October 5th, that's this week. No change or small output, and then output decrease. So this is an interesting shift with some energy pricing. So there's about a 52% probability that no change will happen, and you can see here there's an uptick in the probability that there will be an output decrease. That's what OPEC's been talking about. With some of the compression you see in price on oil and Brent oil, squeezed to the upside in a break, we could be looking at some pretty violent bullishness again if that structure breaks. So look for those falling wedges on oil. We'll see what definitively comes in on the OPEC meeting on the 5th, which is Wednesday. And then as far as the Fed goes, let me reload this. Again, there's no October. We do have FOMC speakers. We have Fed speakers lined up all month. But for the month of November, they're expecting a higher probability of a 75 basis points hike. Again, the Fed is trying to be firm in that message to extinguish inflation, bring it down. We will have inflation numbers coming, I think, October 13th. So that's CPI data. A couple things you want to watch: PPE, CPI, and PPI. Is that right? Did I say PPE? PCE? There's a few acronyms to keep an eye on. But yeah, I mean, the headline inflation, core inflation, what excludes energy and food costs, what includes energy and food costs. There's a chart here on TradingView you can find as well. Just type in inflation and there's a year over year. This is your headline inflation. We're sitting at 8.3. We're a long ways off from 2%. This is US inflation. And what is the Fed talking about? 2%. We're a long ways away from that. So I think the best news for the Fed would be that this ticks lower. Housing is shrinking quickly, demand is shrinking quickly, spending is shrinking quickly. I still think energy is a bit of a wild card. Energy is potentially where things get the stickiest, and that could prevent the faster trajectory of this thing dropping. But I did see something pretty interesting. Even if CPI data came out at 0, if the print for CPI came out at 0, we would still be at like 4 to 5% real headline inflation. Right? So it's not going away. I mean, we need to see very favorable prints on CPI data and other inflation prints to really bring this down fast. So does it drag into Q4? Does it drag into Q1? One thing I keep talking about now that we did take out the lows, go back to the SPY. Since we did take out the lows, historically speaking, with this bad of a start to the year, usually we don't see the market finish at those lows or lower. So I still think that even if we flush a little bit lower, the market will find it in itself to rally. And again, maybe it's not taking out highs. Maybe it doesn't look bullish at all. But I do think that wherever this low is established, whether it's now or slightly higher, that the market's going to find a way by December to finish higher. Again, I could be wrong. But if we're just putting all this pressure on the bears right now and the bears have all the momentum, at some point they will take some profit. We'll get a relief rally, and I think we close back above these levels. So, again, I'm trying to time this a little bit. I'm staying patient with a lot of option trades and equities, and I'll try to get some short-term profits lined up. So we'll do our best. Okay. All right. Everyone, let's go ahead and wrap things up. I got 15 minutes for class. Equities on Demand students Monday through Friday. Flex Tuesday, Wednesday, Thursdays. If anybody's watching for the first time, you want to trade with me live, you're welcome to do that every day during the week. Go to the website, pulverreport.com. And it's 2 clicks. Go to the website, pulverreport.com, click on Systems, click on Trading Rooms. If you want to go to Systems, there's some automated systems I have in classes for Forex. Flex Trading Room is a Forex-based trading room Tuesday, Wednesday, Thursday. Equities on Demand, stocks and options, Monday through Friday. So there's a trial in each one of these. You can save, like 90+%. You can get a trial with me for $27. And many of you that are watching are already in the trading room, so that's great. But if you're spreading the word or bringing new traders in, there's a very inexpensive way to join and trade with us for a month. And now is a good time to be doing it. October, November, December. It's a nice way to finish the year strong. There's tons of opportunities after we've seen some really wild price action this year in Forex and in stocks and options. So let's exploit it. Okay, US PMI worse than expected. Let me check PMI That's purchasers manage. Is that purchasers? Blah, blah, blah. The let's go here. Monday the 3rd, CPI came in for the Swiss. Okay. ISM, PMI. Oh, so that's the ISM. That's it. Okay, so that's low impact. US PMI 52. So this isn't that prints at 10 a.m. This would be a big one to watch too. As long as we stay above 50, things are okay. We get below 50, that's a big recession type indicator. So this ISM is something to keep an eye on. So this is the ISM manufacturing PMI. You want to keep that above 50 bucks or 50 points. If that dips below 50, that's a big recession indicator. Let's take a look at the high impact this week. We have rate decision for the Aussie kicking another 50 basis points to the upside. So more Aussie strength perhaps, or is this just, again, fighting inflation? Banks are raising rates, fighting inflation. Jolts for the U.S. on Tuesday. Cash rate for the Kiwi, another 50 basis points to the upside. OPEC meetings on Wednesday. That's an all-day thing. ADP is a precursor to non-farm. ISM, by the way, non-farm, my session on Friday, we'll start my Pulver report session at 8:30. Let's come out and start the session live right at 8:30 and get the news underway. Is that cool? Yeah. All right. Another ISM print there on Wednesday the 5th. Do we have two this week? So we have ISM manufacturing today at 10, and then on the 5th there was another ISM. Huh. Okay, so we have two prints this week on the ISM. That's odd. We have rate decision for the New Zealand, expecting to raise rates 50 basis points, or rate decision from the Aussie, expected to raise basis points. BOC speech on Thursday, non-farm, and CAD on Friday. Okay, off we go. So it's a pretty busy week to kick off Q4, and good riddance to Q3. So it's a fresh quarter. Let's go. Let's see where the markets are gonna head. Whether we get some risk on, risk off. I mean, risk off we're used to by now. We've seen it for an entire month. So does it look any different if it stays red? Probably not. But if we see some pivots and pockets and some short-term bullishness, there's ways to get positioned for that. Okay. All right, everybody. I'll let you go. Equities on demand students, I'll see you in about 10 minutes. And everyone, just remember, I'll make a note and I'll create the live link for it. But we'll start non-farm. We'll do a non-farm bonus session on Friday for the Pulver report. We'll start at 8:30 a.m. So right when the news breaks. Cool. All right. Nice to be back. Nice to see everybody. Happy Monday. Let's have a good week. See you in the trading rooms, everyone. And then see you on Friday for non-farm. Take care. Bye.